Good morning, everyone. My name is John Newstreet. I'm the president and CEO of the Kissimmee Osceola County Chamber of Commerce. We're delighted to bring you this virtual webinar today to talk more about some of the financial assistance available to you through some of our governmental legislation at the state and federal level. We're joined by real experts who will bring you this oversight. I want to stress at the beginning that this is just an oversight. This is not specific financial advice for you independently, individually. So we recommend and encourage you to reach out to your accountant or financial advisor, or reach out to one that's in the chamber. We'll provide links and some additional information on our resource page at our website, kissimmeechamber.com. But we do encourage you to learn a little bit more about some of this, to give you confidence to pursue this help, to keep you in business, to keep you successful, and to keep our community strong and growing. And so with that, we'll be bringing online some of our partners in this. First, I'll introduce you to Joe Kefauver. Joe is a partner at Align Strategies, and he's also joined by Franklin Coley, a partner at Align Strategies as well. And I'll let them elaborate on some of their bio, but know that they are experts in this space, and they have already done this presentation to C-level suites and many major brands across the country. And so we're honored and privileged to have them join us to shed some light on this new help for you. Joe, I'll give it to you now.
Sure, John. Thanks, and thanks to the audience for joining us this morning. As John alluded, Franklin and I are partners in Align Public Strategies. We're both based here in Orlando, but our clientele is national. Leading consumer-facing brands in the restaurant, retail, hospitality sector. And so as such, we've been very focused on labor and employment policy for the last 10 years or so. And many of those companies have asked us to help them navigate this particular piece of legislation. So I'm gonna jump into it, and Franklin, pass it off to you. But for purposes of context, what we're talking about today is the CARES Act. This is the third installment of a number of pieces of legislation that has gone through the Congress, been signed by the president, and likely will have a few more of these pieces of legislation. This particular act, if you remember, the first one that passed, the first coronavirus legislation, was really about appropriations for the healthcare system. And it was getting needed resources to doctors and hospitals and getting our infrastructure ready to address the pandemic. The second piece was much more employee focused. If you all remember, that was where we were discussing some of the new changes to paid sick leave and paid family and medical leave extensions, and is much more of an employee focused package. This third package is very much a relief package focused at both employees and small business owners. And I use the term relief. You've seen in the media talking about a stimulus and an economic stimulus package. This is not a traditional stimulus package that is looking to bolster the overall economy or a piece of the economy. This is literally a short-term relief bill that is intended to liquidate and get money in the hands of individuals and small business owners so they can literally keep the lights on, so they can literally keep people employed. And so the intent of the law is to keep small business owners with enough cash on hand to keep people as employed as long as possible, as many people as possible, as long as possible. So we're going to talk about that particular bill. Understand a couple caveats. A, that it is very much a work in progress. The rules are being written as we speak on this particular piece of legislation. If you know anything about the federal rulemaking process, it can be a 6, 9, 12-month process under the Administrative Procedures Act to make federal rules and regulations. They're literally doing it in days and hours by the day. And so every day this ball kind of moves a little bit. And so understand it's very much a work in progress. For those pieces of the law that do not have clarity, rulemakers are working with industry and affected parties as we speak to try to bring clarity to that. And there will be subsequent packages to this. As I said earlier, while it's a short-term package to get business owners and employees through the next couple of weeks and potentially months, they're already working, even though Congress is adjourned, they're already working on packages 4 and 5. So all of this is in flux. And of course, our state at some point will get in the mix with all kinds of additional things. I'm sure Rafael will touch on as well. The last thing I want to say is, this is not a forum for legal advice. This is not a forum for banking advice. We will come back to this over and over through the presentation, but we encourage you to get legal counsel, talk to your accountants and bookkeepers, talk to your lending institutions for clarity on what may be the best path for you to take depending on how your enterprise is structured. All right. So having said all that, let's get into the bill itself. And the bill that we're going to talk about is really we've kind of broken it down into three major component parts. Part one is a very extensive, multifaceted loan program administered mostly by the Small Business Administration with a few caveats. The second bucket are some employee-facing provisions as business owners, knowing what, being a resource to your employees about what's happening out there, and also knowing what they're facing and what opportunities they have for relief can probably help you make better business decisions based on whether you lay people off or furlough people. So it's important to know that aspect of it. And the third bucket we'll talk about, tax changes. Again, loan program, the tax changes are about providing liquidity now, having you keep as much of that cash on hand so you're not remitting it to the government and come back in 3 or 4 months as a tax credit. Our loan programs, the employee-facing stuff, and the tax pieces that we were talking about. So Franklin, I'm going to pass it off to you to do the deep dive, and you'll start with the loan programs.
Yeah, thanks, Joe. And I do want to reiterate quickly a couple points you made. We've been doing this webinar versions of this for the past week or so. And on Saturday, we were actually doing one version of this. And the application for one of these loans came online in the middle of our presentation. The same thing happened yesterday for another one of the SBA programs. And so that's how quickly it's happening. Federal agencies do not roll out new programs in the middle of the day on Saturdays. So this is happening fast and furious. And that is the legislators' intent. That is the federal agency's intent. They want to get money in your pocket so you can keep folks on payroll as soon as possible. So let's kind of dive into things. And the one thing I'll say before we get into the business loans that are available to you is you really have to sit down with your internal and external teams, tax experts and lenders, and get out a number 2 pencil in your calculator and kind of do the math in these different programs, because you can't overlap some of these programs to pay for the same things. They have to be siloed and kind of focused on paying for different aspects of your business. And the big choice you're going to have to make is between pulling down the Small Business Administration Paycheck Protection Program loan or utilizing the ERTC, the Employee Retention Tax Credit, because those two programs are basically focused at the same thing, your payroll. You can't do both. You've got to pick one. And so you're going to have to sit down and figure out which one makes the most sense for you. And we're going to talk about both of those, as well as a bunch of other stuff. But first, let's dive into, as Joe, you set it up, the loans and what loans are available to you right now or as early as Friday, depending on which loan you're pursuing. So the big one that everyone is kind of focused on, and in fact, we've already gotten a bunch of questions on, is the Paycheck Protection Program. Businesses that qualify for this fall into a couple categories. First off, you have to be a for-profit business or a 501c3. So chambers of commerce, C6s, or labor organizations, or political advocacy groups, or education groups, C4s, cannot apply for this. For-profit businesses and 501c3s. Within the for-profit business bucket, basically any business with under 500 employees qualifies. The hospitality industry which is our kind of client base, is treated differently. And the way that works is it is done 500 or less employees per location. So what it does is it waives what are called affiliation rules. So essentially, if you're part of a larger system, a franchise system, or a large chain, then you count those standalone locations count as a standalone business for the purposes of pursuing these loans. That was obviously done because the hospitality sector was hit early and hard by this, and so they're treated a little bit differently under the program. So if you qualify, then I would highly encourage you to get online as soon as we conclude this webinar, because a bunch of guidance went out middle of the day, late yesterday, as well as the application for this program. And that is going to give you a ton of information. In fact, we got greater clarity late yesterday on a number of aspects of the program, and additional guidance is expected to come out in the coming days. The application period for the Paycheck Protection Program will open on Friday. So you can begin submitting your applications on Friday, and a ton of businesses will be submitting applications. Now, Joe in the beginning talked about they're already contemplating Relief Bill 5 and 6. I suspect there will be additional monies, but this is not an infinite amount of money that has been appropriated to this program. The money will run out at some point, and everyone would be smart to try to get to the front of the line as much as they can, as best they can. So that's who qualifies. That is the process. You're going to fill out this application. Now, where do you submit the application? The way that this is going to work is SBA, the Small Business Administration, is going to rely on their local lender partners across the country to actually issue these loans. So you need to reach out to your lender if you haven't already and find out if they have a relationship and do SBA loans already. If they do not, ask if they're going to, because SBA is basically going to lower the thresholds and kind of throw open the floodgates for almost any lender that wants to participate in this program to participate in this program. So you need to identify a lender that you're going to be able to submit your application to. So that is the process. So let's talk about the loan value itself. How do you determine how big a loan you can pull down? And it gets a little bit complicated. I'm going to just kind of give you the broad strokes here. But essentially, what you're going to do is you're going to take your average monthly payroll. And there's two ways to determine that. And you can look it up in the guidance documents to find the exact dates, or in the documents that the chamber sends around. But essentially, there's two ways. You can choose a 12-week period from the past year, or you can take the year from the past year. And that's going to give you your average monthly payroll. The reason why they set up two different time frames is in case you're, have seasonal business. This would account for that. So you're going to take your average monthly payroll and you're going to times it by 2.5, or 250% of your average monthly payroll. That is the amount that you can go seek a loan for under the Paycheck Protection Program, up to $10 million. So what can be included in that total payroll amount on your average monthly basis? It's a bunch of stuff. Obviously, it's payroll. So that includes, wages, tips. If you want to include it, cash, you can include that. You can include paid leave benefits, as long as you're not taking a tax credit on them from the second relief bill, the bill before this one, or you're obviously not using one of these other programs we're going to talk about later. Healthcare costs, retirement costs, education, basically benefits. So compensation and benefits can be lumped into this amount that gives you the total amount that you can go seek a loan on. Yet again, this is all outlined in the guidance documents. The employees that you count in there will be capped at $100,000. So employees that are making more than $100,000, you're capped. You can only count that first $100,000. If you are the business owner, if you're a sole proprietor, if you're pulling salary out of this this business, then you can count that in as well. It gets a little tricky, and we're doing our best interpretation of the legislative language. As Joe said, the agency is still interpreting this, and we're going to get additional guidance. So you need to work with your lender to make sure that everything I'm telling you is spot on. But this is one area where it gets tricky. If you're an owner and you're taking a distribution, for instance, Schedule C distribution, or you have a management company that is drawing a monthly fee. It's kind of unclear how that will be handled and how that will work. You're going to have to work with, your team, your lender, to figure out what can be included and what can't. But this is how the contours of the program are working now. Again, additional guidance likely to come out today or tomorrow that kind of clarifies some of this. So that's how you get your total loan amount. The conventional wisdom is people are going to try to get that amount as high as they can. They're going to throw as much as they can into that calculation to push up their loan amount. The big question is, how do you get some portion or all of that loan forgiven on the back end? And it's a little unclear. We have a general idea of how it's going to work, but the loan forgiveness. So first off, if you've laid off or furloughed employees, there will be a grace period to bring those employees back on full time. And so the loan forgiveness is calculated off of keeping full employment for this period. Hitting pause and going back to what Joe said in terms of the intent of the legislation. The intent of the legislation is to put money in Americans' pockets right now, specifically American workers. And they're either going to do that through the unemployment program or by giving you money to put into employees' pockets. And so whether you're open or closed or whatever, they want you paying your employees. So the way you get this loan amount forgiven is by essentially being at full payroll or some portion thereof. So the way the legislation reads is the amount that you get the loan forgiven for will be, quote unquote, reduced proportionally due to the fall off in employees over an 8-week period. So you're going to get the loan, you're going to have a grace period, you're going to get the loan, and then the clock's essentially going to start, and you're going to have an 8-week period to keep everyone on payroll. And so the amount of the loan that's forgiven is going to be based on that. We don't know the exact formula, right? And it could be one for one, it may not. And there is the formula gets a little tricky in that essentially 75% of loan forgiveness is going to be based on your payroll. Some of the other stuff the other purposes you can use for this loan there are just a few. It's payroll, and it's basically keeping the lights on. So rent, mortgage, and some taxes that are related to that, but it's very narrow. Utilities. So it's basically kind of keeping the lights on and paying your workers. Obviously, you're going to want to pay very, very close attention to the loan forgiveness piece. Yet again, the exact equation has not come out yet for how to get full loan forgiveness. Is expected to come out in the coming days. But the basic way that it's going to work is to get full loan forgiveness, you have to keep everyone on payroll. When you let people off of payroll, then you're going to have to repay that loan. And it's pretty favorable terms. I think you can defer payments for the first year. It's like a 4% interest rate, and it's a 10 or 20-year loan. All the details are in the document. The way that the full employment calculation is expected to work, and it's not 100% clear, this is something else that's going to come out in the guidance document, is going to be based on full-time equivalents. So that calculation became embedded in federal statute when ACA was passed, when healthcare was passed. And so however you calculate full-time equivalent for ACA, or you can just Google how to calculate full-time equivalent. It'll take you to a government agency website, I'm certain. That is how you're going to calculate your full-time equivalent to determine what full employment is for the 8-week period to ensure you get 100% loan forgiveness. Those are the big pieces of the Paycheck Protection Program. We are spending more time on this than any other. Some of these other ones we're going to buzz through. This is the program that most people are interested in. There's $350 billion appropriated to this program, and it is not going to last forever. So if you're interested in this program, you should pull down the docs and pull down the application and get your arms around it, meet with your internal team, and try to get your application in as soon as possible. So with that, I will pause before we go into some of the other SBA programs, and before we get into tax credits. Joe, John, was there anything I missed there? Anything you want me to highlight?
So we'll bring Joe up here to compliment if you missed anything. I just want to say that's a great overview and we appreciate it. I also want to stress and kind of alluded this at the beginning, but we have a resource page at the KissimmeeChamber.com website. And so all this information in black and white, so to speak, has been retrieved from partners like Align Strategies, the U.S. Chamber, some of our trustee law firms. So this is all factual, to the point information that you can reference on our website after you get off this webinar. So we appreciate Franklin and Joe, of course, elaborating on the things that may not be in black and white. But I do want to just kind of make you aware again that we have a resource page at the KissimmeeChamber.com website with all this information. There'll even be a blog posted later today that'll break this down as well. So I just wanted to remind folks of that, and before you go into the EIDL and the next SBA loan program. So thank you.
All right, thanks for that, John. Yeah, so we'll dive into the EIDL program is in kind of DC talk, the EIDL loan program. And I would say too, and I think Rafael later is going to get into this, SBA has tons of loans and there's tons of opportunities with the SBA. We're only speaking to 2 programs that were appropriated a bunch of money and expanded upon specifically in response to COVID-19. And so the other program that Congress appropriated a bucket of money to is the Economic Injury Disaster Loan Program. Now, this is an existing loan program through SBA. The kind of novelty or the piece that is new and is unique to this program is if you fill out the application and apply, then you will automatically receive, the legislation says within 3 days, an advance of $10,000. And that will be forgiven, essentially turns into a grant if it is directed towards approved purposes, which is a very wide, it's much wider than the Paycheck Protection Program. You can put it towards a lot of different things, and that will be forgiven. So that is the big piece. It's literally, this is designed to just start putting money into small businesses very quickly. The EIDL program beyond that is just a traditional loan, and it has very favorable rates, and you can look up the rates. I think it's 3.75 over an extended period. And here's the deal. They're opening up the pool for lenders to come in, and they're opening up the pool for small businesses. So all those kind of traditional requirements, the credit elsewhere and collateral and all, those are basically stayed. I mean, the expectation is that small businesses are coming in, they don't have any money. And so it's going to be open up to about anyone. So, this is a program you should really look at. This is up to $2 million. Yet again, I said traditional loan. Now, here's the thing that you need to be aware of. You can't double up the EIDL loan and the Paycheck Protection Program. So you can't pull down EIDL loan monies and then pay for payroll and then also pull down the Paycheck Protection Program and utilize that for payroll. You potentially can side by side these programs. So where you're pulling down the EIDL loan to cover something that is not covered by the Paycheck Protection Program, and then pull down monies from the Paycheck Protection Program to cover your payroll. But you need to work with your lender partner and your accountants and everyone else and figure that piece out and make sure you have it really buttoned up and you're not kind of doubling up, if you will, on the same purposes, because that is definitely a no-no. If you already have an EIDL loan, if you've already submitted paperwork for an EIDL loan, then you can roll that into the Paycheck Protection Program. And essentially, if you then abide by the rules of the Paycheck Protection Program, you can get that loan forgiven. There will be additional guidance around how to do that and what that looks like. So you need to stay tuned for that if you fall into the category of someone that's already secured or is in the process of securing an EIDL loan. Those are the biggies. Yet again, SBA has a ton of programs, but in terms of the loans, those are at least that apply to y'all, those are the biggies. Now, I would mention one more loan program that's out there, because you're going to hear about this on CNN or Fox News or MSNBC, wherever you get your news. It's going to dominate the headlines, but it's very unlikely that it applies to you. And that is, there is a big pot of money, $500 billion, that was appropriated to the Federal Reserve and the U.S. Treasury. And that is the traditional kind of bailout money. So if you think back to TARP during the economic crash for the big banks, and you think about back to the auto bailouts, there's a big pot of money for big public companies. And the federal government in those instances is going to come in and take an ownership stake, whether it's stock or some other equity instrument, in those companies. And, some years from now, they will cash it out at a profit. That's what happened with the auto companies and the banks. And there's stipulations on pulling down those monies. And that's what you're likely to hear about in the press. And, one's a neutrality agreement for union organizing campaigns, and stipulations on executive compensation and oversight by Congress. And there's all these things. And that's going to get a lot of play in the press. But that does not apply to the Small Business Administration loan. So when you hear that stuff, just know that it's very unlikely that that conversation applies to you. So with that, I will wrap up the loan section and allow my team here to correct the errors or flag anything I may have missed before we move on to the tax component and then the worker compensation component.
On the you stress, I just want to stress again, the double dipping component, and being very clear when you sit down with your lenders and your financial people that you understand that taking this particular loan or may inhibit you from taking this particular loan, or it may inhibit you from taking the tax credit. The double, while the programs are very, very generous and the terms are very, very favorable, they will not be very generous if people are found to be double dipping. So you got to be really careful and work with your lenders and your professionals on that piece. The second piece I want to emphasize that Franklin said was, even though this is a vast amount of money that the Congress has appropriated for these programs, to use this point, it is finite. There is a limit. And so there's going to be, now that the kind of the gates are open on this loan program, I can't stress enough how quickly, as soon as this webinar is over, you haven't already, start that process with your financial people and your lenders to understand what you may be not only eligible for, but maybe the best fit for your particular business model. So I just want to stress those things. And Franklin, could I ask you to do one more question I just want you to elaborate on in terms of the loan forgiveness? If you use all those money for the Paycheck Protection Program towards payroll, you get 100% forgiveness. If you use a portion, your forgiveness is prorated to that portion. Can you just reiterate that again so the audience is clear?
Yeah, and we're going to have additional guidance on this, and we don't have the exact formula. And so, but the general way that it's going to work is that if you keep everyone on payroll, you're going to get 100% of the loan forgiven. And the way that it reads is essentially 75% of this is going to be determined by people you keep on payroll. So there is an allowance that some of the monies can go towards utilities, rent, mortgage, etc., and you can still get the loan forgiven. That's the expectation. But for every full-time equivalent that during this 8-week period, once the clock starts, that you lose, you're going to go down in the loan forgiveness amount. And how that exact equation works, we don't know. They're probably going to come out in the coming days with that. But yet again, going back to the legislative intent here, the idea is to incentivize you to keep everyone on payroll and not to push them off to the unemployment rolls, which have also been bolstered. But the idea is to keep people employed for this time period while hopefully the kind of craziness we're in right now passes.
Thank you, Franklin. Thank you, Joe. And before we let you go, I'll mention to the audience that this is on Facebook Live, is how you're seeing us. And so if you have a question, feel free to put it into the Facebook Live chat, and we'll try to answer that before the end of the hour. So feel free again to interact with us through Facebook on the questions. Franklin, you may have mentioned this, but and the focus here is the CARES Act and help on business. But can you talk just briefly to the individual payments for folks making $75,000 or whatnot? Are you comfortable talking about that?
Yeah. So two other buckets, John, and these we will buzz through. These won't be nearly as long as the SBA the loan portion. But the two buckets, one is the worker assistance and one is the taxes. And so in the tax portion, you can choose, instead of the SBA loans, or instead of at least the Paycheck Protection Program, to take a tax credit. And that is referred to as the Employee Retention Tax Credit. So you need to sit down with your tax folks and see if it makes more sense to pursue the ERTC than the Paycheck Protection Program. And that's a refundable payroll tax credit up to 50% of wages. There's a 100-employee break. So if you're under 100 employees, it's all wages. If you're above, it's only wages or work stoppages that were impacted by COVID-19. That is only for the first 10,000 of expenses, and that goes through the end of the year. Now, to qualify, the Paycheck Protection Program, probably everyone or most people listening are going to qualify. Qualifications for this tax credit are a little narrower. You have to essentially have a 50% decline in gross receipts, or your operations were fully or partially shut down due to the COVID-19 crisis. There's some other tax credits that you need to go through here: a delay of the payroll tax, modification of net operating losses, the QIP. There was a fix to the QIP, which I won't go into. It's Qualified Improvement Program, and so that may put, if you have done improvements to your restaurant, for instance, over the past 2 years, this was a fix to a technical correction to the tax cut bill, then you can immediately amend your tax returns, send that in, and get credited for those improvements you made to your property. So there's a bunch of tax stuff in here you need to sit down with your team and go through, because it's going to put money in your pocket. At least one of those excludes you from participating in the loan programs. To the last point, New Street, John, and I will wrap it up here quickly. The legislative intent is to put money into workers' pockets, whether that's through your small business or through their mailbox or through the unemployment insurance rolls. And Congress appropriated through this act $1,200 to every U.S. resident that is making less than $75,000 a year, and a $500 child tax credit. So for a household of four, that's 24 plus 1,000, 3,400. That adds up pretty quick. Now there is between 75,000 and 99,000 for an individual. It declines. So I don't know the exact formula, but if you're making 87,000, you're not going to get the full 1,200. You may get 1,000. And the same thing, there's a similar formula for total household income. But those checks are going to be issued just like a tax refund check would be issued. The Treasury is running those checks, and they're going to drop them in the mail, and they should be in U.S. resident households here in the coming weeks. They also extended unemployment insurance programs by 39 weeks, stretched it out, and added an extra $600 per week. So the amount's going to differ state by state, and I don't know what the exact amount will be in the state of Florida, but there's certainly a scenario where an entry-level worker can actually make more through the unemployment program than they actually could through their employer. And there was a late amendment that was run by Senator Sass that would have capped the unemployment insurance benefits. That failed. So employers have to kind of think through things here from a labor relations standpoint, and how you're going to talk to workers, how you want to, because in some instances, workers can actually potentially have more money on a weekly basis, through unemployment insurance and actually through their employer. But there's other considerations, right? Obviously, they won't have a job. If you have health care through your employer, then, you can potentially lose health care. And so there's a whole bundle of considerations that employers really, really need to think through here, because it is uncommon that that the unemployment insurance program is this robust and it's just something that you need to be aware of and think about. It's part of the big bucket of considerations here.
So a lot of information. I've got a question. If you can, this comes from Lisa Drawnik, and it's through our Facebook. Would you please repeat which is the best program to cover not only payroll but also rent and utilities? And maybe that's an unfair question, because I was going to ask as well that, is there a clear winner in all of these offerings, or does it really get with your financial advisor and get the best case scenario because they're all kind of equal footing?
Get with your financial advisor, your lender, and sit down with whether it's your internal or external bookkeeping and accounting teams, and you have to do the math on these programs. I cannot say one program is going to be better than the other for any individual business. I wouldn't want to say.
So not only payroll but also rent, utilities, they all have their offerings, and you still want to talk to your advisor?
Yeah, I mean, the Paycheck Protection Program includes rent, utilities, as does EIDL is much wider and includes that. And then you've got to look at some of your tax credits. You got to also take into consider at the local and state level that FPL announced that they're going to essentially allow you to defer payment, right, for some months. So that's essentially like a loan, right, via your power company. And you're going to see similar action at the local and state level. So you really, I wish I could tell you definitively, but each circumstance is going to be unique depending on who your utility provider is, depending on who your landlord is for rent, or your lender for your mortgage. They may give you 3 months, not necessarily forgiveness, but deferral. And so you're essentially getting a loan from them at 0% interest rate, right? So you got to really go through and be really smart in a quick period of time. I know it's tough, but about how you kind of layer these different programs and costs to keep the lights on and keep going until hopefully this crisis passes.
Thank you. We're going to bring up Rafael Pratts. So Joe and Franklin, if you hang on through the rest of the chat in case there's some questions, we can come back to you. Appreciate it.
Sure.
We're going to bring up Rafael Pratts, and as we do, I'll introduce him. He's the director of the Small Business Development Center office here in Osceola County. That office, SBDC, is located in the Kissimmee Chamber building here at 1425 East Vine Street in Kissimmee, so right next to the Valencia campus on 192. His services are free. He has a whole scope of services he can probably run down real quick, but the reason why they're free is because our county government, Osceola County government, and City of Kissimmee fund those services to help our business community. So a shout out and thank you to Osceola County and City of Kissimmee. But I'm proud and happy to work with Rafael and introduce him to talk a little bit more of some various financial resources you have, especially on this financial assistance topic today. Rafael, it's all yours.
Well, good morning. Thank you, John, for having me today. Wow, I want to shout out to Joe and Franklin for doing a remarkable job covering that material, which is very beneficial to small business owners. Let me just start with a couple of things that I've seen so far working with clients and trying to help them with putting loan packages together for either the economic injury loan or the emergency bridge loan with the state of Florida. Documentation is going to be key. So I would definitely tell you reach out to your accountant. Make sure that you have minimum your tax returns, both for the company, in addition to that for your personal tax returns, the business receipt, any type of documentation that could validate your case and make it stronger. You are going to need those documents, whether it be the state Florida emergency bridge loan, or if you decide to apply for the SBA economic injury loan as well. Having those documents up front is going to make your life that much easier for you to manage, especially when you're starting uploading information into their system. One of the things a lot of clients might get turned down is not because they don't know what they're asking for, but they don't submit a complete package. You need to make sure that whether it be the Florida emergency bridge loan or the economic injury loan, that you are submitting the documentations that they need. If not, your file is not going to get reviewed properly. It's not going to go into underwriting. So that's primarily the number one reason a lot of clients don't hear back or might hear back on a later date. So let me just quickly tell you about the Florida SBDC. It's a Florida network. We've been partially funded by the SBA. We are partnered to the Small Business Administration. locally by the county and the city, but also we're funded by the state of Florida. So we're here to help the small business community in Central Florida. We're hosted by the University of Central Florida, and we cover 8 counties as a whole. I believe we're going to have my information. It's going to be provided to you just in case you would like to reach out to either myself or to anyone in our team that works within the 8 county region. And with that said, I want to take some time to talk a little bit about the Florida Emergency Bridge Loan. It is a loan given by the state of Florida, a promissory note for 1 year, interest-free. It does typically it could go up to $50,000. They do make some exceptions. It could go up to $100,000. But after 1 year, the interest rate is at 12%. There's a deadline to apply. It's May 8th. And obviously, it's contingent of the funding. So this is a situation right now. The program that is run by DEO, Department of Economic Opportunity, and it's the component is we're here, one of the administrators, to help them with help clients put those loan packages together. The system right now is a little bit overwhelmed. They have received more applications, I believe 18 to 20,000 applications in the queue as we speak. But if you want us to help you locally here in our region, we could try to expedite your file, meaning we could walk you through the process as far as give you the paper application, get that package. Most likely going to ask you for your tax returns for the company and for your personal, your business receipts, and then payroll. You have to have a minimum requirement of 2 people working for your organization. It could be yourself or it could be an independent contractor, but I don't want to take too much time into that. If you have questions pertaining to that and you would like to apply, feel free to reach out to us. There's a website that we have put together as well. It's called sbdc.orlando/coronavirus. So I think that's also going to be provided to you. Hopefully you could go there and give you some tidbits, some videos as far as some programs, and it walks you to the steps and the requirements as far as eligibility and the documentation you might need. In addition, we're also helping clients with the SBA Economic Injury Disaster Loan. One interesting thing as far as this loan, obviously the interest rate. So the Florida loan, the bridge loan, is to secure short-term working capital. So one of the things that both Joe and Franklin have mentioned and stressed is that they don't like to see double dipping. Meaning, for example, let's just say that first one that kind of rolled out was the bridge loan. And then you decided, you know what, maybe the economic disaster loan might be a better tool, especially if you're thinking about maybe financing. The terms are a little bit different. They could finance up to 30 years. The amount could be up to $2 million. But what you want to do is basically once you said, I just got the disaster loan funds, then you go ahead and pay off the bridge loan. One thing about the disaster loan with the SBA is a loan that is typically, you don't ask how much money you need. It's a working capital loan. So based on what you submit to them, they're going to make a determination what they think is a reasonable amount that you could pay back based on your cash flow and your operations. Okay. So for example, the good thing with any of those loans is that they could come back and tell you, well, we could provide you $250,000. You're able to kind of modify how much you need. Maybe you say, you know what, I don't need 250. I could go to 25, or altogether you could say, really, thank you so much. I really don't need those funds. So the good thing is that I tell clients, hey, you know what, go ahead and apply for those loans or for those programs. You could always make a determination that if something looks better, you could kind of phase out of one and move into another tool that might work for you. Now, with the economic injury disaster loan, I just want to make sure there's also a little component called that within the CARES Act. Well, let me just talk about the CARES Act a little bit. They did a remarkable job talking about the PPP. One thing, my best advice to you pertaining to this, because it's a new program, is to talk to your local lender, the local lender that you currently bank with, to see if they're part of the program, because right now, local lenders or lenders in particular, they're talking first to their customer base. So as you could imagine, there's a lot of people interested in this program. So you work with a lender where you have your banking or do banking with, I will definitely reach out to them and see if they could kind of walk you through the process. but that will be your best option as far as getting more detail pertaining to the Paycheck Protection Program. And also, as far as the economic injury, there's a different component called economic injury loan, called advanced, where the U.S. Federal government, they're giving up to $10,000 as a grant. So for more information, definitely feel free to go to the SBDC / Orlando.com, coronavirus, to get a little bit more detail pertaining to that. Again, thank you so much for the opportunity to serve. Again, we're here. And if you have any questions, feel free to reach out to us. Thank you for your time. I didn't want to take more than that, so I know we're really for time.
Well, we've got 15 minutes as we move over the hour, so appreciate your sensitivity to that. Again, great information. You're working hard. The thing I'll stress about Rafael is, there's been a lot of webinars this past week trying to get you information, and you'll get some pretty big names, the agency heads, but Rafael's here in our neighborhood as your neighbor, helping you survive and fill out these applications and get this work done. So appreciate all that you do for our community, Rafael, and anything we as a chamber can continue to support you, just let us know.
Thank you. I really appreciate that.
Yes, sir. So if we'll bring Franklin and Joe back up as well, appreciate there's a particular question that's come onto our thread, and so from Lance Boyer, he cleans vacation homes, and so his business is affected, and he also asks about someone who owns a vacation rental at $2,500 a month. I'll let you lead on the answer there, Franklin.
Yeah, so I think the first question is, and I'm going to hand off to Rafael here, but I think the first question is, as an independent contractor, his business has basically collapsed, right? As they've shut down vacation rentals. So, unlikely scenario, but the LLCs or whoever he works for the vacation rentals could choose to continue to pay him, and they could apply for some of these programs probably to do that. But that understanding that's probably likely not going to work. In fact, in the Paycheck Protection Program, there is some wiggle room and allowance. Yet again, the final rules aren't out, so we don't know exactly how this works for independent contractors. But having gone, he also owns vacation rental homes, and his income has drastically dropped. Rafael chime in here, but I think he would be probably eligible for a variety of different loans. I think the EIDL loan would certainly qualify there. And yet again, the application is up right now on the SBA website. So you can go kind of click through it and look at the document and see if you think you'll qualify. But it seems to me, and you need, do some research on your own. I don't want to tell you definitively. Seems to me that's probably a good option. Depending on how you compensate yourself, possibly the Paycheck Protection Program as well. But I would wait to see how the final guidance comes out there. And yet again, as Rafael just mentioned, you need to work with your lender on that to make sure you would qualify for that. Rafael, you want to jump in here and talk about what may be a better fit?
Yeah, definitely. Thank you so much. I would definitely encourage you to reach out to the particular programs that you're inquiring about. I know when they were writing those bills, they were really trying to make sure that they were addressing some of the concerns with the gig economy, meaning people that maybe work as an independent contractor. It is a big section of our market as small business owners. So you need to kind of look at the fine detail, but they make some concessions as far as making sure that those loans and those programs are accessible to those type of contractors. But again, my stress to you would be, make sure that you have your documentation squared away, because you need to make your case, meaning if you were doing XYZ, that you had the company registered, that you're able to make a case. This is not that you were really seriously affected. You have to make the case that you have been affected at what they call the economic injury. It's not going to be pictures of a building, but it's going to be your financials. Your financials are going to tell a story. So for example, let's just say that your revenues in the first quarter for the past 3 years were $300,000. and this quarter has only been $100,000. So you could make the case that, hey, you know what? I've been directly affected by COVID-19 because right now $200,000 I'm off, and that's playing a role into my operations. And you have to tell a story. So the best way to tell a story is hopefully with your financials and forecasting. But they do make some concessions as far as the different programs out there to help.
Yeah, and that's great counsel, and some of the things too. And Rafael, correct me here, but you probably want to just go ahead and pull together regardless. Are your business tax returns for the past 2 or 3 years, business certificate and license, business leases, or mortgage information, payroll information for the last 12 months. To your point, those are going to be the documents, and there's probably more, but those are certainly the documents that you're going to need to provide, and they're going to help to tell that story.
Yeah, because as you know, where there's an opportunity, there's always fraud. So there's some people that are actually say, you know what, how that low-hanging fruit, and so they really want to make sure, especially like, for example, the Florida Emergency Bridge Loan, they really want to make sure that when you submit the package that you provide your business receipt. They really want to make sure that the company is active and is currently doing business and registered to do business in the state of Florida. And also, so you need to really make sure that you provide them that documentation. As far as them with the emergency bridge loan, they need two employee count, but you could have as one be an independent contractor. So they do show some flexibility that in that minimum requirement, you could even have independent contractors to count towards the minimum threshold. That wasn't the case before. Before, you had to have 2 people as far as in your W-2s or in your 941s in the quarterly estimates. But now they're making some concessions. So that could be the same case for other loan programs. But for more details, definitely call us, or you could definitely go to the SBA website. They do disaster loan, and they will give you some really good information pertaining to that.
Thank you, Rafael. Thank you, Franklin. Thank you, Joe. We're coming up on the hour, and there's just one last question, and it's really a reminder. The question, does the Chamber have someone who can help a small business fill out the application for the EIDL program? Since that goes through the SBA has an agreement with the SBDC and Rafael and his team to help assist in the application. Again, they are located in our Chamber building, so when we are, you can reach out to the information in the comment thread to reach out to SBDC to get help on filling that application. I see 2 more comments real quick.
John, if you don't mind, I would like to say something pertaining to that, because our office is right now, we're working remotely, so we're still open for business, but we're helping clients virtually. So that they could definitely reach out to me, and I do have the contact information that I provided. They could definitely reach out to us so we could help them. My suggestion is that there's a paper version as far as a SBA economic injury loan. I do have the PDFs, and also there is the online version. For time's sake, I would definitely encourage people to do the online version, because if you submit the paper version, it's going to take them 2-3 weeks longer for them to even look at your paperwork. I have clients who already have submitted the documentation with the economic injury loan, and then they will get a follow-up confirmation. Hey, we got this, but you're missing this document. I would like to stress to you, you have about a 7-day window to submit the documents that you are, or they say that you have not submitted. And also make sure that whatever number you gave as a contact number, you have that telephone very close to you, because they're going to reach out to you, and then I'm going to call you a couple of times. So you really want to make sure that you are very proactive. So when they do call, you're there for them, and you could provide them so they could expedite your file accordingly.
Appreciate that, Rafael. Again, another question, which program is best for my business? So in every instance, we refer you to an accountant or a lender to guide you to the best scenario for your business, just encouraging you to collect all your documents and have those ready for that discussion, and to do it as quickly as you can, because Friday will open up the floodgates to access the capital that does have a cap for some of these programs. So have your documents ready, but please, in each instance, it's an individual basis depending upon your business structure and your finances. And so we can't tell you on this exactly which program is best for you. we wanted to give you the oversight and then refer you to your financial advisor to guide you through that process. But again, get those documents together and take advantage of it by Friday so you have access to the capital in place. With that, I'll close it out again with a thank you to Joe Franklin and Rafael. Joe and Franklin from Align Strategies, Rafael from the SBDC. This was an overview, but again, we refer you to either your own accountant or an accountant that you can find in our directory as a chamber member. Links are provided in the thread to each of the resources that were referenced in this discussion. I presume and encourage all the lenders and accountants out there to have their phones ready to get phone calls based upon these questions and information so you can take advantage of this. Our mission statement here at the Chamber of Commerce is to be champions for business and community. And through this pandemic, we've adjusted our operations and changed the hashtag from Champions for Business and Community to hashtag Champions Adjust. And remember, we're in this together. We have a website that's constantly updated with factual information to guide you and help you. But we are in this together, and there is a brighter future just around the corner, and we're racing toward it. So keep the faith and keep the doors open, but stay safe, stay healthy, and stay distant for now. Take care, and thank you for watching.